Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at Glmr. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right-hand corner of the screen. Now, let's jump straight into the TA. Taking a look at the daily chart, on Glmr against USDT or Glmr against Tether USDT, we have the same Fibonacci retracement set up with the swing high printed back in April of 2022, last year, and the swing low printed in February same year. If you don't know how to use the Fibonacci retracements, there's going to be a link down below in the description that's going to take you to a video where I explain in detail how I use the Fibonacci retracements. And we go over this in every single video, obviously, for all the newcomers, but the people who have been watching my videos for quite a while know that the Fibonacci retracements are a very important tool in my analysis. So taking a look at the fib levels here, so we have a couple of important fib levels. So we have the second fib level at 54 cents that is rejecting us, and it has been doing so ever since what's that there? October last year. As you can see, we had a wick there in October, twice actually. We got rejected in November, got back down to the 2.414. We actually retested that twice, and then we had a move to the second fib level once again, and we got rejected twice in February, and now we're pulling back down towards the 2.272. So for me, this is going to be a great buying opportunity at 39.24, or actually if you take a look at the fib level exactly, it's going to be 0.3910, but we can buy slightly higher because we don't want to be piled in with all the people that are going to be setting up buy limit orders at this exact fib level, because there's going to be quite a few people who are going to be using the exact same fib with the exact same settings and targeting the exact same levels, just like people use the exact same EMAs. So you want to be entering above those levels and you want to be selling below those levels, just so you're not piled in with everyone, because there's a chance that you might not get filled in. That's just a little tip that you can use. And as you can see, we have a blue support block here that's set up from 51.5 cents down to 42.5 cents. And right now we are targeting that. We're actually on that support here. And currently I'm dollar cost averaging into Glmr, but if you want to get all of my trade alerts and every coin that I buy, all the low cap gems, exclusive podcasts, episodes, and a whole bunch of interesting posts, my Patreon is linked down below in the description. There's going to be a 7-day free trial, so if you want to check that out and get access to all of my content since October of 2021, feel free to do so and let me know what you think. So once we're going to be pulling back down here, I'm going to be entering below 40 cents, and we do have another support level based off of the fib, which is going to be at 33 cents roughly. That's going to be our 2.414 level, and as you can see, we bottomed out there twice, once in November and once in January, and from that low in January, we had a move of 81%. So Glmr did not perform as well as some other altcoins, but this was a nice move nonetheless in a few months. So once we lose this support block, which I think we will, as Bitcoin just wants to pull back down to the 20 weekly EMA so badly. So once it does that, we can actually start entering the altcoins more aggressively. And obviously, we always save cash for potential flash crashes or any black swan events. So pulling back down here below the 2.272, we have a support block here that's based off of this little trading range that we have. And that's set up between 36.5 cents down to 34 cents. So that's going to be another area where you can dollar cost average a bit, and obviously 33 cents here, which is the 2.414. Now, if we were to drop down below that, that's going to be quite negative, but you can target 26 cents. To be precise, 0.2580. But I really would not want to be losing this low that we printed in January, because that is going to be very negative. And if we drop a Fibonacci retracement from that low, from that high to that low, we get our technical target at 22.5 cents, and the 1.414 is just slightly below the 2.618 on the large fib. So if we do drop below 33 cents, roughly 25 to 24 cents to 23 cents, that's going to be our target area. But this will be uncharted territory for GLMR, for Glmr, because we've never been that low. So we'll just have to wait and see how the price reacts to that. Hopefully that's not going to happen, but obviously the cheaper the price for the project that you believe in, the better it is for you, because you get to buy more coins with less money. So that's regarding the support levels that I'm targeting here. Also, something that I want to mention is that we are going to be having a token unlock on March 11th. So as you can see, there's 8 days, 14 hours, and 17 minutes left. A total of 9.6 million tokens will be unlocked, which is approximately $4 million. And that's almost a 1% of the total supply. And as you can see, 25% is still locked for GLMR. And the fully diluted market cap here is $426 million, while the current market cap is at 250. So the circulating supply is roughly half of the max supply, which is not very good, to be honest with you. But as we start getting through these unlocks, the price is going to be relieved, and we're not going to be seeing a lot of price suppression, because this is all happening because of these unlocks. And the unlocks are going to be over, I think, in October this year. I'm not sure, but it's supposed to be October this year. And this is a great website to check out as well, token.unlocks.app. Great website to check out some tokens. They have a lot of interesting data. So feel free to check that out. And jumping into the daily RSI, let's see what's going on here. As you can see, we're coming back down lower and lower in this channel down pattern. As you can see, if I take this parallel channel indicator and I do something like that, we just move it up like that. There we go. As you can see, we do have a channel pattern here that we are adhering to, and at some point this has to be broken either to the upside or to the downside. But as you know, channel down patterns are usually broken to the upside, so maybe we're going to see something bullish. I don't know, but like I said, Bitcoin leads the market, so whatever Bitcoin does, altcoins will follow. So if we continue down this channel, this is looking like a perfect bounce off of the yellow support trend line that we have here. So we could potentially come up here briefly to retest the resistance of the channel one more time before coming back down. That entry there at around about 33.5 on the RSI is going to be great, because we've been holding this yellow support trend line for a while, since May of 2022 actually, which is pretty strong. So hopefully we can hold this support trend line. If not, the support block below from 31.7 down to 23.4 is going to be an incredible entry, as every time we were in that support block since May, we had a move to the upside. So that's something that you can target as well. Now let's switch over to the Binance chart. Taking a look at the 12-hourly chart on Binance, I do want to point out this little bullish pattern that we may see play out. So as you can see, we do have a potential inverse head and shoulders pattern playing out. So you have your left shoulder, your head, and your right shoulder, and you do have your neckline over here. And if you break above the neckline, you're going to be targeting around about 75 cents, I think. But that is quite too bullish. That is a bit too bullish. If Bitcoin decides to drop down, this is not going to be playing out. And we don't need to be dropping any lower. If we start dropping lower towards the February low here, that's going to be negative, and that's going to break this pattern, or invalidate it, I should say. And we're printing a bearish cross on the 12-hourly chart. That's quite negative. The last time we did that back in December, we saw a pullback down to 33 cents. So I'm leaning towards the bearish scenario here, because the Fed is trying to battle inflation, and things don't seem like they're gonna grow long term for 2023. So obviously by the end of the year, I'm expecting, growth. But for now, for the first to second quarter of 2023, I don't think we're gonna be in this super bull market, hype mode. So if we fail to hold 40 cents as support, we're probably going to be dropping lower, And yeah, this is a potential pattern that we're looking at. If we end up breaking above the neckline, that's when we start targeting 75 cents. So this 75-cent target is not our current target. It's only our target after we break above this yellow resistance trend line, which is basically the neckline there. So once we break above that, that's when we can start targeting it. And you can see that we got rejected from this yellow resistance trend line at 55 cents multiple times. This was a great indicator for us to take some profits. We could have had nice swing trades, both 25-ish% swing trades, which was great. So if you follow the videos and you like swing trading GLMR, this was a great time to do so, as you also were getting pretty overextended on the RSI, as you can see here. You got overextended over here actually back in January, but then you started printing bearish divergences because the RSI was printing lower highs, but the price action, if you take a look at the price action, was printing higher highs. And that's a bearish divergence. And I think right now what is happening is that we are actually suffering the consequences of that divergence. So I think we're going to be losing 40 cents. And I think because of the token dump on March 11th, we might see a stronger pullback. So I would say have some cash for March 11th because you might want to be dollar cost averaging into GLMR. The volume indicator here potentially has some sort of a descending pattern here, where usually when you see descending lows for the volume indicator, you typically see a breakout. So not typically, but a lot of the times you do see something like that. So we might have a quick break to the upside with a correction afterwards, obviously. So maybe that's what's going to happen. But yeah, as you can see, we're getting lower highs on the volume. And the stochastic is on its way back below the index of 20. Once that happens, great buying opportunities. The MACD printed the bearish cross back here on February 23rd. The bearish cross on the price action happened on February 28th. So those are two bearish indicators for you. And yeah, and plus we have the March 11 unlocks. We have the CPI and PPI data coming out on March 14th and 15th. So March could be a bearish month. Historically, it's a very bearish month as well. So just be aware of that and don't buy all in at one price. I'm not a financial advisor. And that's pretty much everything that I have for GLMR. Thank you all for watching. If I missed out anything important on the video, on the charts, let me know. And I'm going to see you in the next update. Take care. Goodbye.